sitting on your hands is a very special trait that successful traders learn how to develop. The people who get wrecked in this market are the people who trade every day, jumping in every day, looking for the opportunity every single day. Sometimes it's just not there, guys. And sometimes you just have to be patient enough to say to yourself, I'm gonna wait. These are the things that you have to develop in regards to trader psychology that will allow you to get into moves that are beneficial for you. Yo, welcome to The Long and Short. Maestro here with your daily crypto TA and market analysis. On this channel, we give opinions on crypto news and events, give in-depth technical analysis and tutorials on how to trade crypto markets. No matter if you're a scalper or a long-term hodler, please like if you are in the crypto fight, subscribe if you're with the vibe, share if you care, hit the bell if you need direct mail. Let's go ahead and get into the money. Everything looks pretty green today. Most cryptos are trading in deep green territory in anticipation of what the Fed may announce. Now, my prediction is that the Feds are actually going to kick the ball down the road to March and potentially give us a rate hike at that time. Lots of different people trying to figure out how many rate hikes there are going to be this year and how high the rates may actually go. Everyone's sort of on an edge right now trying to figure out what's going to happen at 230p. So we are also watching this, currently sitting on our hands in the market. All right, there's a few things that you need to know. I think this article right here sort of encapsulates the entire threat to crypto when it comes to the Feds raising these rates. Today marks the second day of the Federal Open Markets Committee, the FOMC January meeting. Doesn't stand to be aid to crypto prices, and here's why. Okay, there's about 8 points that they make in this article, which gives folks an overall view of how this could affect crypto. All right, so let's break them down. The same economic issues which plagued 2021 are still deeply influencing the economy in 2022. Indeed, Americans are seeing the consumer price index CPI pushed even higher thanks in large part to unalleviated supply chain issues. To combat this inflation, experts expect the Fed to call for several interest rate hikes. How many, we still don't know. First rate hike could come as soon as the next Fed meeting, which is in March. Interest rate hikes spell bad things for crypto rebounds in the same way as it stands to hinder growth stocks. As investor rates go up, investors tend to cycle out of riskier investments like growth stocks and crypto. The rate hikes could keep much needed capital from rushing back into the drained crypto asset class. Already showing itself today, as Economic Times points out, trading volumes of the largest cryptocurrencies are stagnant. Investors are obviously holding out to see if the Fed really will implement a March rate hike. If it does, crypto investors may react poorly. I have mixed opinions about this. I don't think all of crypto will be affected in the same way if in fact the Fed raises rates. Here's what I mean by that. If people are going to go into more risk-averse assets, what is the most risk-averse crypto currently in the market? What do all of the institutions, those who have enough willpower to get into crypto, what do they get into? They get into things like Bitcoin, right? And so if any crypto is going to survive this here, if the Feds do start to raise the rates, it's going to be the safer cryptos, things like Bitcoin, things like Ethereum. All of the other altcoins probably have the greatest chance of seeing real declines in the market if the Feds do start to raise the rates. Now, in my opinion, based on the inflation in the market, they're going to need to bring that down. The only way that they know how to bring that down is through raising the interest rates. So we do know that it's coming. How much is the question? How fast is the question? How the economy will react broadly is the full question. Okay, so right now, this has investors sort of sitting on the sidelines waiting to see what's going to happen, right? And the sentiment is pretty much cut down the middle. This next article here we want to highlight says, Bitcoin market sentiment rests on a knife edge as communities split on price direction. All right, so they took a Twitter poll and they conducted to see whether or not people think Bitcoin is going to hit 20,000 or 50,000 first. And it's pretty much split down the middle. With the price of BTC around 35,000 on Sunday, 37,270 at the time of press, the voting wavered at 50-50 for the bulk of the day. With 63,168 votes counted at the time of the poll's close, the final result was only very slightly in favor of 20,000, which captured 51.5% of the vote, while 50,000 captured 48.5% of the votes. All right, so if we scroll down here, we can actually see the poll and the results. On-chain analysis of BTC also shows that 99% of short-term holders are currently recording a loss, and that's vital, guys, right? If 99% of the short-term holders, the people who got in within the past year, are at a loss right now, then the question becomes, how convicted are they in this space? Did they get into Bitcoin because they saw the price rise and they saw people making money with it and they thought that they can do it too, and now they're at a loss? If you're a short-term holder and you're not fully vested in what Bitcoin is actually going to do, or crypto as a whole is here for, if you're not aware of what the technology is for, chances are these people will sell. Okay, this is the moment when people start to capitulate to the market, right? They get angry, they see that their portfolio's down, they've actually lost money in the market, and they will capitulate to it. They will give up and say, hey, you know what? Just take the loss. I'm going to take the loss. And these are the people who will walk away from the market after this loss, depending on how big it is, which is why we always say buy low, sell high. You don't have to worry about this as much, and understanding where these levels are in price based on the relative range of price is important for people to understand. Most investors who just get into crypto don't understand this yet. And so they buy high. They buy when the most hype is in the market, and this is why they end up getting wrecked. So all of these people are at a loss, and that's a pretty big number, 99%. How is that going to affect the market moving forward? Are these people going to be inclined to buy back in at a lower price, try to bring their dollar cost average rate down, or are they going to sort of just give up, right? That's the question. On-chain data shows that in the past, such situations have been indicative of a short-term bottom in the BTC price, followed by increases. Okay, so we are taking a look at the charts today. We are going to dive a bit deeper into where we think we may run into resistance depending on what's happening with the broader economy here. There's also some macroeconomic issues in regards to potential conflicts that may be brewing up, both between China and Taiwan, as well as the US and Russia. So all of these things are affecting the market right now, guys, which is why price is down, which is why we're seeing the type of volatility that we're seeing. When traders are uncertain, they sit out. They don't trade, because anything you do right now is considered a higher risk than maybe a month ago. Okay, let's take a look at the Fear and Greed Index, currently trading at 23. Yesterday it was at 12, pretty extreme fear, but the pumps over the past couple of days have put the market in a better perspective in regards to less fear than they were, but we're still at extreme fear at this current moment. Okay, so let's go ahead and jump into futures. Again, this is a daily contract, 9-month outlook, so we're getting pretty updated information here. All right, price still swinging below the 13 EMA, and just as we said in previous videos, whenever you see price really break down from an EMA, the next thing it needs to do is sort of respond back to it. Okay, so it's sort of like a rubber band. Price is going to try to stick to this EMA as close as possible. Once it falls down, the next thing for it to do is try to push up to sort of regather itself with the EMA. Now, what we want to see, if price were to break this EMA, is a break also of market structure, which is going to come in somewhere around 44K. Will we make it there? There is a lot of resistance pretty much right above 40K that is going to push us back down, guys. So we need to be aware of this right now. Bulls are trying to take control of the market in a way. I see that in the order books, but there's still a lot of resistance above us. Okay, when it comes to the open interest and volume has picked up recently. Okay, in anticipation for what's going to happen. Most of this was negative volume, okay? But your open interest is also falling off. People are sort of sitting on the sidelines again, waiting to see what's going to happen with the Fed and what their decision is going to be potentially by March, all right? Which means that these next few months could be very choppy, right? Price may go up and down, but I think we're going to stay in a pretty tight range, you know, as far as price movement is concerned. You're not going to really break out bullish. You're not going to really break out bearish until you have firm news and people have a better understanding of what the Fed may do. Okay. Also, there's some conflicts that we need to be aware of in the broader market here that we've already mentioned. Okay. Looking at the commitment of traders, small speculators moving more towards the zero line, thinking more short, coming off of those long positions. Larger speculators are thinking more short as well. And the commercials are sitting right in the center line. All right, when it comes to our elder rate, the bears still have some power here, but it looks like they're starting to relinquish a bit. All right, I think if price were to go down to 30K, you will start to see a change in this, but it may not happen right away. It will happen incrementally over time. There has been some money coming in. We can tell by the money flow index. Things are creeping up a bit there, which is a positive sign. I want to see us creep above this negative 40 line before I really get any real confidence that the bullish momentum is really starting. As you can see, momentum still stuck sort of sideways between our zero mark and 20K. And PVT, OBV starting to look up. But all of this, again, was pretty much with anticipation of what's going to happen with the Fed. And accumulation is still pretty strong at the moment. All right, let's dive into the charts and see what we're actually going to be looking for Bitcoin. So we want to point out a couple of different areas on this chart. As you guys know, we've sort of went over this quite a few times when it comes to areas of imbalance and areas of liquidity. Okay, so we draw these areas out on the chart, and we believe and we see right? And we're able to prove that price goes to these areas. It's drawn to these areas, right, as it moves. So what we like to look for is where the areas have been hit, sort of taken, and where the new areas are, okay? So when you talk about liquidity, we're talking about things like stop losses, limit orders, resting orders in the market, okay? That's essentially what we mean by liquidity. So anytime that you have equal highs, equal lows, triple tops, double bottoms, doesn't really matter. If you have 2 points meet up on the chart, that's an area of liquidity, okay? There's resting orders right above or below those levels that you can take advantage of, and price will draw itself to those levels, okay? So basically what we said before in previous video was that price did come down to an old imbalance area here that was back in September that price created, okay? On the way there, it also cleared out another old imbalance that happened in September. But as price moves up, it also creates additional imbalances in price, okay? So you do have one here that we're highlighting that was just sort of printed in the market that you guys can see here, all right, over the past, couple of days. Now, do I think price will go back down to the level of 35, 34? That has a great chance of doing that, especially if the news today is negative, okay? But will price push up to another area of imbalance that was previously left by the first real push down, which happened mid-January, last week, okay? So we're looking here in this area as well. Price may push up to this area, okay? And there's really two areas above it that we could get to. The first area is this area of liquidity. If price were to snatch these equal highs here and then turn around, then we will definitely expect price to go for 35 and may even come back to this imbalance area here, creating a double low, okay? If price were to break this liquidity aggressively and still continue to push up, then our next level of resistance is going to come in this area of imbalance somewhere around 42 to 41. All right, so two areas could kick us back down. The first one being right under 40K, the next one being right above 40K. And we can show this on the heat map as well. All right, so these are the areas that we're looking for. Price could also bounce down into this imbalance zone. And if we were to take a Fibonacci and try to draw a retracement here, all right, we can see that this imbalance sort of aligns right with that golden zone, right at around 62 to 70% retracement. All right, so everything aligns there for us if we're looking at this from a practical T8 perspective. If price were to retrace back down, we're looking to get supported somewhere in this level here. Okay, that also gives price enough to snatch these lows, take out all of this even set liquidity here, take this level, then continue higher. That is also a possibility. Okay, so if we're thinking bearish, okay, liquidity grab or this imbalance area will be hit first, giving people a nice little pump to get involved with for them to push the price back down. Or we could actually come down here to this level, fill in the retracement levels that we think may be hit, and then continue higher if we're in bullish territory. Okay, so those are both of your scenarios to look for. I can't tell you which way price is going to go. All we do is react off of what price is doing currently and what it left behind and what it may still need to fulfill before it moves to new levels and extends out of these areas, okay? Let's take a look at the heat maps, all right? We're going to base this on a 4-hour perspective. And if you don't really know how these heat maps work, essentially what you're seeing here are these white lines, these yellow lines, orange lines, okay? Think about this just like heat, okay? When something's white hot, that means there's a lot of orders there. So when you see these white lines here, that means that there's a lot of orders piling up in this one area. What we like to see are clusters of orders, okay? And the way that we judge these is by saying, okay, anything below price is probably in order to go long. You will have people who short these areas as well, but the ratio of longs to shorts in these areas below price is way off, right? So most people are going to go long if price falls. Inversely, most people are going to go short if price rises. So what we like to look for on these heat maps is where are the clusters of these white lines, deeper, darker yellow lines, and these orange lines, okay? Because this is going to tell us where price is going to be supported. So if we zoom out on this a bit, right, we're able to see that we do have a cluster, okay, that starts to develop itself somewhere right around 30K. Starting at around 31K is where you're going to start to see most of your bigger resistance levels. And if we zoom in here, we can see the first order that comes up is around 337 Bitcoin. The next one down, 291 Bitcoin. The next one down, you have sort of a doubled up layer here at 167 and 1.2K Bitcoin. This is right at 30K, right? So the higher level higher number orders start to kick in maybe around 30K. So you do have a lot of support here currently on the order books that has not moved. It's actually started to substantiate itself over the past few days. Okay, so these are the levels that we watch for if in fact price is going to go lower for Bitcoin. Okay, if you look above, you do have some resistance levels here starting to kick in somewhere right around 40K. Remember what we said, guys, right under 40K and right over 40K is where you're going to start to see your resistance, but price may want to go there because there are imbalances that price could try to fill before it reverses and goes the other way. Not as much resistance as there is support. So any bounces that we're going to see around the 30K level should be pretty substantial. If you're thinking long-term hodling, I would say purchasing anywhere under 33 to 32K is a fair buy. And this is not financial advice. This is just what we're seeing on the charts. The reason why we make this assumption is because once price starts to creep below 33, 32, 31, coming into this cluster, you're going to have a lot of fighting going on at these areas. Do we think the bears still have enough power to push us lower to 20K? That's the question, right? This support level here at 30K is going to really tell the tale for Bitcoin. All right, moving forward. So giving you all of the levels, things that you should watch when it comes to Bitcoin. But right now, a lot of these orders are kind of just sitting still here, guys. There's not a lot of volume in the market right now, just essentially because everyone's still waiting to see what the Fed is going to do. Let's take a look at a few other coins here when it comes to XRP. Zooming out again, similar situation. More support than resistance at the top, but do we think that XRP could actually fall off to lower levels? Well, yeah, we definitely think so. 60-cent XRP is definitely not out of the question. Okay, we saw that prices did reach these levels before down to around 55 cents. So do we think it can go there again? Definitely, but you do have some areas of support being set up here right at around 60 cents, right? 59.2, you have 1.6 million XRP waiting to be executed, and the next level below that is sitting right at 50 cents. All right, so I'm thinking if I were a buyer in this market, I'm looking to get into XRP if it goes anywhere under 60 cents, okay? There seems to be some support here, but price may actually fall to 50. So if I can get it lower, I'm definitely looking for that as well, okay? Not a lot that's keeping it from pushing higher if in fact it does go higher. Let's get a few more levels here. Yeah, okay, so we like to look at the white levels, but these orange levels are also pretty important if you get them to pop up on your screen here. So just zooming in just a bit. XRP is kind of being squeezed a bit in current price action. And again, I think, most cryptos are sort of just sitting still right now, waiting to see what's going to happen. Taking a look at Ethereum, let's go ahead and zoom out a bit. Again, Ethereum looks even stronger than Bitcoin, guys, when it comes down to it. Tons of support just sitting right here for Ethereum. The first real levels of, major clusters are starting somewhere around the $20,000 level, okay? So can Ethereum push down to 20K? Definitely. But once it starts to hit these levels, guys, you're going to have so much support standing in the way of the bears continuing to push ETH down. And they've had a pretty good run, right? ETH has come down from around 4K. I think that the bears may start to become exhausted over time. Now, of course, we can see lower levels, guys, especially if the market starts to capitulate. Bitcoin breaks under 30K, breaks all of that support. That will be a reason for people to sell, right, and capitulate to the market. So Ethereum, same sort of thing, but it's under 2K, right, under 1,500. If Ethereum were to break under 1,500, then we will have a real problem here, guys. And I think that the market will definitely see lower levels. Altcoins at that point will be getting completely crushed, based on what our current analysis sees. Because for Bitcoin and Ethereum, you have support here. For some of these additional altcoins, like we just saw for XRP, and we'll see for others, there's not as much support. So we need to be aware of that. One perfect example is Cardano. Okay, taking a look at Cardano here, we can see that there are some setups for resistance here, right? And I think that this is due partly because of the current infighting that's going on with the Cardano community. They set up the Sunday swap DEX. There seems to be some issues with that. Some liquidity is being held up. So there's some problems in the Cardano infrastructure, right? So I think that some of these orders here are definitely meant to push the price back down short. And as you can see, they're heavily clustered here. So price may want to stay out of these areas. You're being rejected on Cardano anywhere under $1.15. Very hard levels of rejection, and they're not backing off. These have been here for the past couple of days. There is some support, but it's a bit more spread out. So price does have a better chance of breaking these levels under $1. Can Cardano reach 85 cents, 80 cents even? I definitely think so. And if it were to break these levels, these singular white line levels, you can see much lower prices for Cardano, maybe even down to things like 50 cents. As you can see, these orders here have come off. I think that they have sort of pushed up and propped up Cardano a bit. We did have a bounce the other day based on what the other crypto markets have done, but I would say that this is something that we need to watch for Cardano here. Okay, let's take a look at AVAX. AVAX does have some levels of support, but they're starting to come off. Okay, looks like some of these orders have definitely been taken off of the books and moved to lower levels here for AVAX, starting at around 43 bucks. Okay, now your first level of real support may come in somewhere around 55. AVAX has been running, did see a bit of resistance here right at around 71 bucks. Okay, now right at around 68.2, you're starting to get a pretty nice influx of orders, but it's not going to be enough, I think, to keep this price from moving down. You do have areas of imbalance that are showing up on the chart. When it comes to AVAX, I do say that you do have some ability to continue to push higher, but we want to be careful here. There's not a lot of support under the current price action. So if in fact you do get pushed lower, there's not very much to catch it until you get to the levels of maybe 53 bucks, okay? A little bit lower than that. This concerns me though. This area here concerns me in regards to them taking off those orders to support AVAX. They may be thinking that this is an altcoin that will see some sort of major drop if in fact the Fed does come in and mention that they're going to raise the rates. Okay, so be aware AVAX could fall pretty substantially pretty quickly. There's not a lot of support here in the order books to support it if it does fall. Okay, let's take a look at MATIC. MATIC also finding some resistance here at around $1.75. Another level of resistance set up here at about $1.80. Next one at around $1.85 to 87, and then the next one at about $1.90. So again, 5-cent increments in regards to your resistance levels here. You do have some support. Everything's pretty spread out, so price may go ahead and continue to range within these levels here. Your first major areas of support come in somewhere around $1.30 and below, right? Next to $1.20. Your major clusters are starting at $1.10, $1.11, same place that they were yesterday. Nothing's really changed for MATIC. Again, so we're kind of waiting to see what happens with the Fed, but you do have some support levels set up substantially for MATIC. I think anywhere really under $1.30, you may start to get supported, right? So these levels that we're calling out to the bottom side, guys, you can use them to gauge when you may want to get into the market. I think prices may fall to these levels, definitely if the Feds do have some negative news or kind of kick the can down the road, you can see a negative impact on crypto. I wouldn't say necessarily that these are the automatic levels I'll be buying at, but they are good buying opportunities if you're dollar cost averaging in. Okay, let's take a look at Solana. Solana does not have a lot of resistance sitting at the top. The first levels are really coming in at $115. The next levels after that is around 122, 123. You do have some clusters of support being set up here in the order book. The first one really gets very strong around 55, and then you have another strong cluster here around 61. And there's another cluster starting to develop here somewhere around, let's say, 82. Solana being supported, we think that if the price were to fall, you would see these rebounds sort of back up if in fact the market does go into a range. So this is what we're going to be looking for. The Fed is going to determine a lot, so we're just waiting to see what happens here. All right, for Cosmos, pretty spread out price action here. People are waiting for levels to get hit for Atom. I'm assuming that they will sort of still continue to get sandwiched and squeezed within these levels here. You have a pretty strong resistance being set up and a lot of clusters being set up here, starting right at around 36 to 37. Okay, so if price were to push up to there, I'm expecting it to get kicked back down. Not a lot of support immediately below price. You do have some clusters that are starting to set up here around the areas of around 32 to 30 bucks. Okay, below that, you're going to start to run into some clusters, maybe starting at around the $28 level. Okay, so as long as price action is spread out like this, we're going to expect for the prices to sort of flow within a range and sort of get rejected off of some of these higher levels of orders here, okay, both top and bottom. All right, let's take a look at Polkadot. Polkadot also has some pretty strong levels of support here, starting at around, let's say, 1650. Nice big cluster order set up here. It looks like they sort of move these orders up a bit to support Polkadot if it were to fall to previous levels or equal lows here. Okay, so what we may anticipate is the price to come back down, start to tap into these areas, maybe wick down and continue to move up, keeping price in a range that it's currently establishing here. So no real major movements for DOT. There is some resistance that is starting to form up a bit here, but I'm not seeing this really pushing the price down too far substantially, right? As soon as you run into these clusters, you're going to get pushed right back up. So that's what we're looking for Polkadot. Again, everything's still stuck in the range, awaiting to see what the Fed may do. All right, taking a look at Luna, let's take a look and see. Big support areas starting to set up here somewhere around the $53, $54 level. Other than that, you have sort of singular support lines. There is a nice little cluster that's starting to develop here right around the $60 level. Okay, so for Luna, if we were to drop to around 60 bucks, that may be a good trade to take, essentially because you have some equal lows set up here. I would think that price will probably want to break this market structure here to the lower side to snatch this liquidity before move up. But again, you're still sort of stuck in a range here, guys. As long as the price action is sort of spread out like this, you're going to see different levels hit within a range. It's going to reverse somewhere. But if it were to come down to say 54, 53 bucks, you're going to see more of a bounce like you saw here at this level here. Okay, this level is being supported right at around 53. So this is what you want to look for Luna. We're going to be in a range, but there is opportunity in ranges if you know how to scalp play or swing play these types of moves. Okay, for the graph is sort of being supported on its way up, as you can see, right? The orders are sort of being placed right as the price moves up, and the resistance is starting to break down a bit here. There was some major resistance, but there doesn't seem to be as much as the support, right? So this is what we want to see if we're still anticipating good price action. The graph did take a major hit, right? And it sort of had that V-shaped recovery. They kind of kicked into gear right around 34, 35 cents, okay? So anytime price will return back to this level, you have a pretty good indication that it may bounce again. Price does like to create these double bottoms in price structure, okay, when it's creating a range. Anything under around 35 cents, you do still have support starting at around 33. Nice clusters starting to develop under 31 as well. So if price were to reach these levels and there's nothing major telling you that price is still going bearish, I would say that these are pretty good buy opportunities for the graph. Things are being supported here, not a lot of resistance at the top. Okay, Chainlink, again, maybe a little hard to see, but price is sort of in a battle right here for Chainlink, which is why I think this price action is being super squeezed in at this point. Wherever there's resistance, there's support. Wherever there's buyers, there's sellers, okay? I think price may choose a direction, again, based on what the Fed may do. But if you were to break lower, you do have support at levels that are starting to set up somewhere around 13 bucks. These are not as clustered as we would like to see them, but they do have dual levels of support, which does give us a bit more confidence. If price were to fall into these levels, it will be supported at one of these levels here. Okay, so first one starting at around 13 bucks, next one down at around 12, and I think these kind of go in dollar increments all the way down. Okay, so you do have some support for Link, not a lot of resistance at the top, even though these orders are still sort of sandwiching and squeezing Link into this very small range, which I think we may eventually break out of. You're going to have to go one way or the other here. This volatility and this squeeze is a bit too tight for price to stay in these areas. It needs to break out one way or the other. Last but not least, let's talk about AAVE. AAVE, very similar to Chainlink, right? Getting squeezed. Okay, let's talk about AAVE. Price movement very similar to Chainlink. Everything's sort of getting squeezed in this center place here with both buyers and sellers meeting at the table pretty much at the same time, okay? Not a lot of resistance to the top here that we can see. There is some support here starting at levels at maybe around 130 bucks, okay? But not a lot of clustering, okay? There are some additional levels that are being set up here. In order for us to establish a floor for AAVE, I think we need to cluster, see a lot more clustering in these orders here. Okay, so you have a big wall set up at about 155, which is where price is fighting at the moment, between 150 and 155 bucks. Price is sort of swinging between this level right now, fighting, and you can see this in the order book. Okay, so price may continue to swing in these ranges. The buyers and the sellers, they're meeting each other at the table for this particular moment in AAVE. Again, we're waiting to see what the Fed's going to do. We're waiting to see what's going to happen with the market. For the most part, people are really scared, right? They're unaware of what the Fed may do, and that is what's driving the fear in the market, along with a few other sort of geopolitical issues when it comes to potential conflicts that we may see here. All right, so markets are sensitive, guys. I would say if you're looking at any type of opportunity right now, the best opportunity for you is to sort of just sit and wait. All right, that is also an opportunity. You don't always have to be involved in the markets. Let's not get into the thought process of saying I have to do something every day in the market. Real traders know you trade sparingly when you have the proper setups in order to do so. You don't just jump in because your friend says so. You don't just jump in because a YouTuber says so. Okay, you want to plan these things out based on your analysis and what you see in the markets and what you think may happen. And if you're unaware of how to play the market, then you can go research opinions, but by no means should you use those opinions for investment decisions. Okay, guys? In my opinion, the Fed is going to kick the ball down the road. I think they will wait until March to announce the first hike. They're not going to come out today and say anything. The markets will react to that. Okay, and then they have to wait 2 months before they actually implement it. Okay, guys, so that's the look at the overall market. Let's kind of jump back to the heat map to see if anything's changed since then. Prices are starting to come down just a bit. We're starting to see a bit more light green. Everyone's waiting on the sidelines. Okay, this announcement is going to come out shortly. If you are viewing this video after the announcement comes out at 2:30 p. Eastern Standard Time, then you're starting to see the effects on whatever the announcement was. No one knows what it's going to be. I'm pretty sure that there's some insiders who know. The market has been moving up this morning in anticipation of the announcement. So that's a relatively good thing. But if we know anything about the market, they never want to put you on the right side of the trade. They always try to put you on the wrong side of the trade. So this bullish activity worries me a bit in regards to what may actually happen with price. With that being said, I'm sitting on the sidelines. I don't need to trade every day. I don't need to make a decision every day on when I'm getting in and out of the market. Let's wait and see what happens at 2:30. I think that this may be sort of a wait and see moment for the next couple of months, but hopefully they do give us some more insight into what's going to happen with these rates coming out today. And that'll give the market some direction. Uncertainty is always the thing that kills markets, so we do need direction here, and hopefully they can provide that for us today. All right, so it's your boy Maestro. Thanks for tuning in. If you do like this type of content, go ahead, hit the like and subscribe button. Other than that, guys, that's all I have for today. Just watching the news and waiting to see what's happening. Hopefully you're doing the same. Salute. It's your boy Maestro. This is the long and short. We out of here. Peace.